Imagine a single rental property replacing your monthly paycheck. Picture never worrying about rising rents because tenants are paying you. In 2025, ordinary people are building extraordinary wealth with rental properties faster than ever, turning small investments into lifelong financial freedom. How? Through proven strategies that leverage cash flow, appreciation, and smart financing. Whether you're a beginner or a seasoned investor, this step-by-step guide will show you how to start with one rental property and scale to a portfolio that secures your future and creates generational wealth. Ready to dive in? Let's explore why rental properties are wealth-building machines, how to start in 2025, and the mindset needed to achieve true financial independence. What's stopping you from owning assets that work while you sleep? Why rental properties build great wealth? Rental properties aren't just investments, they're engines of wealth creation. They deliver multiple streams of financial benefits that compound over time, making them one of the most powerful tools for building prosperity. Let's break down why they're unbeatable in 2025. First, cash flow. Every month, tenants pay rent, putting money in your pocket. A well-chosen property can generate hundreds or thousands in positive cash flow after expenses like mortgage, taxes, and maintenance. For example, a $200,000 property renting for $2,000 a month, following the 1% rule, could net you $500 monthly after costs. That's $6,000 a year per property, and it scales with each new acquisition. How would an extra $500 a month change your life? Second, appreciation. Real estate values tend to rise over time, especially in high-demand areas. Historical data from the National Association of Realtors shows U.S. home prices have increased an average of 4 to 5% annually over the past 30 years. A $200,000 property today could be worth $300,000 in a decade, boosting your net worth without lifting a finger. Combine this with rent increases, driven by inflation and demand, and your investment grows exponentially. Third, tax benefits. The IRS loves real estate investors. You can deduct mortgage interest, property taxes, insurance, and maintenance costs. Depreciation lets you write off a portion of the property's value each year, even as it appreciates. And with a 1031 exchange, you can sell a property and reinvest the proceeds into another without paying capital gains taxes. These perks shield your wealth and maximize returns. Ever wondered how the ultra-wealthy keep more of their money? This is one of their secrets. Fourth, debt paydown. When tenants pay rent, they're essentially covering your mortgage. Over time, this reduces your loan balance, increasing your equity. A 30-year mortgage on a $200,000 property with a 20% down payment means tenants pay off your $160,000 loan, turning a small initial investment into full ownership. It's like having someone else build your wealth for you. Finally, generational wealth. Rental properties are assets you can pass down to your children or heirs, creating a legacy that lasts. Unlike stocks or bonds, real estate is tangible, producing income and value for decades. Imagine leaving your family a portfolio of rentals generating $10,000 a month. What kind of future could that secure for them? Consider this scenario. You buy a $200,000 duplex in 2025. In 10 years, it's worth $300,000 due to appreciation. You've collected $120,000 in rent, $1,000 a month per unit, and your mortgage balance is down to $80,000. That's over $200,000 in wealth from one deal. Cash flow, equity, and appreciation combined. How many properties like this would it take to replace your income? The answer might surprise you. How to start in 2025, a beginner's blueprint. You don't need millions to start investing in rental properties, just the right strategy. In 2025, low interest rates, projected at 5-6% per Freddie Mac, growing demand for rentals, up 7% year over year per Zillow, and innovative financing options make it easier than ever for beginners to break in. Here's a step-by-step plan to launch your real estate journey. Ready to take notes? Step 1. Find the right market. Not all locations are equal. Look for areas with strong job growth, low vacancy rates, under 5%, and rising rents. Markets like Minneapolis, Minnesota, or Raleigh, North Carolina are hot in 2025 due to tech and healthcare job booms. Use tools like Zillow or Realtor.com to analyze rent trends and vacancy rates. Ask yourself, is this a place where people want to live and work? A strong market ensures steady tenants and appreciation. Step 2. Finance smart. You don't need to pay cash. Federal Housing Administration, FHA loans require just 3.5% down for owner-occupants, meaning a $200,000 property costs $7,000 upfront. Veterans can use VA loans with percent down. Another 2025 favorite is house hacking. Buy a duplex, live in one unit, and rent the other to cover your mortgage. Platforms like Rocket Mortgage or Better.com streamline financing with digital tools. What's your plan to fund your first deal? Step 3. Run the numbers. Never buy blindly. Use the 1% rule. Monthly rent should be at least 1% of the purchase price. For a $200,000 property, aim for $2,000 in rent. Calculate expenses, mortgage, taxes, about 1-2% of property value, insurance, $1,000 a year, and maintenance, 1% of property value annually. If cash flow is positive, you're golden. Apps like DealCheck or BiggerPockets calculators make this easy. Are you crunching the numbers before you buy? Step 4. Make it passive. Rental properties can be hands-off with the right systems. Hire a property manager, 8 to 10% of rent, to handle tenants, repairs, and paperwork. Apps like RentRedeye or Buildium automate rent collection and maintenance requests. In 2025, tech-driven property management is a game changer, letting you focus on scaling. How much is your time worth compared to a manager's fee? Let's illustrate. You find a $250,000 triplex in a growing market like Boise, Idaho. With an FHA loan, you put down $8,750. Renting each unit for $1,000 generates $3,000 monthly. After $2,000 in expenses, mortgage, taxes, etc., you pocket $1,000 a month. That's $12,000 a year in cash flow plus appreciation and equity growth. One deal, 1 year, and you're already building wealth. What's stopping you from starting small? For in-depth information and expert guidelines, contact www.iconictowergroup.com. Scaling to great wealth, the snowball effect. One rental is a start, but true wealth comes from scaling. The secret is the BRRRR strategy: buy, rehab, rent, refinance, repeat. A proven method to grow your portfolio exponentially. Here's how it works in 2025 with real estate tech and financing making it easier than ever. Buy. Purchase an undervalued or distressed property in a strong market. Use platforms like Roofstock or Auction.com to find deals below market value. Rehab. Renovate to increase value and rent potential. In 2025, labor costs are high, up 10% per home advisor, so focus on high ROI upgrades like kitchens or bathrooms. A $20,000 renovation could boost a property's value by $50,000. Rent. Secure reliable tenants using screening tools like Cozy or SmartMove. Higher rents mean more cash flow and better refinancing terms. Refinance. After the property appreciates, say 5% in a year, refinance to pull out your equity tax-free. For a $200,000 property now worth $250,000, you could refinance and extract $40,000 in cash while keeping the property. Repeat. Use that $40,000 as a down payment on the next property. Each deal snowballs, letting you buy more rentals without new capital. This strategy is how investors turn one property into 10, generating $10,000 plus monthly in passive income. For example, an investor starts with a $200,000 duplex in 2025. After 2 years, it's worth $240,000. They refinance, pull out $32,000, and buy another duplex. 5 years later, they own 5 properties, producing $5,000 a month in cash flow and $500,000 in total equity. By 2035, they're financially free. How many properties do you want in your portfolio a decade from now? Mindset and freedom, beyond the money. Rental properties aren't just about dollars. They're about freedom. Freedom from landlords who raise your rent. Freedom from bosses who control your time. Freedom from debt that keeps you trapped. In 2025, with remote work normalizing and housing demand soaring, up 12% per Redfin, real estate offers a path to live life on your terms. The mindset shift is critical. Most people trade time for money, stuck in a 9-to-5 grind. Rental property investors own assets that generate wealth while they sleep. This requires discipline, learning markets, crunching numbers, and taking calculated risks. It's not get rich quick, it's get rich smart. In 2025, resources like BiggerPockets, YouTube tutorials, and real estate meetups make education accessible. Are you ready to invest in your knowledge as much as your properties? Consider the stakes. A single rental could cover your living expenses. 5 could replace your job. 10 could fund early retirement. The average American's net worth is $192,000, Federal Reserve 2023, but real estate investors often hit millions by their 40s. Why? Because they embrace the long game, leveraging time, tenants, and tax benefits. What's your vision for financial freedom? Overcoming obstacles in 2025. No investment is without challenges, but 2025 offers unique opportunities and pitfalls. Interest rates, while lower than 2023's 8% peak, hover at 5%, so lock in fixed-rate loans to avoid surprises. Rising property taxes, up 4% per core logic, require careful budgeting. Tenant turnover, averaging 20% annually per rent cafe, can disrupt cash flow, so prioritize long-term leases and tenant screening. Economic uncertainty, recession fears linger despite GDP growth, makes market selection crucial. Avoid oversaturated markets like San Francisco, where cap rates, profitability, are below 4%. Instead, target secondary cities like Charlotte or Indianapolis, with cap rates of 6 to 8%. Technology helps. AI-driven platforms like Reonomy analyze deals in seconds, and virtual tours on Zillow cut travel costs. How will you navigate these challenges to stay ahead? The road to generational wealth. Rental properties are a proven path to great wealth, but they're also a legacy. Each property you own is a building block for your family's future. In 2025, with inflation pushing rents higher, 3.5% annually per apartment list, your portfolio's value grows while tenants fund your wealth. A $500,000 portfolio today could be worth $1 million in 15 years, producing $50,000 a year in passive income. That's money your children or grandchildren inherit, securing their financial independence. But it starts with action. One property, one market, one smart deal. 2025's tech tools and financing options makes scaling easier than ever. For in-depth information and expert guidelines, contact www.iconictowergroup.com. The question isn't whether rental properties can make you wealthy, it's whether you'll take the first step. What's holding you back from starting today? Conclusion: your wealth-building journey starts now. Building great wealth with rental properties in 2025 is within reach for anyone willing to learn, act, and persist. From cash flow to appreciation, tax benefits to debt paydown, real estate offers unmatched potential for financial freedom and generational wealth. Start small with one property and adopt a mindset of ownership over trading time for money. The tools, FHA loans, property management apps, market data are at your fingertips. So, what's your next move? Will you keep renting your life away or start building a portfolio that sets you free? Share your thoughts below and like and subscribe for more content on mastering real estate investing.